Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Let's talk a little bit about SoFi because it continues to be one of the most talked about and popular stocks, especially for new investors. And there are some things you should probably know about this company, both good and bad. So let's go ahead and break it down. I will remind you, around a year ago, I did an entire video, a 20-minute breakdown on SoFi and gave you my thoughts and gave you a deep dive breakdown on the value of the company in terms of how much money they're making, what they were spending their money on, and where we expected them to go. Now, ironically enough, I guess to some, back then when we did the video, SoFi was about $5.66 a share. It is lower now today than what it was a year ago, which is another way to say the stock is down 20% in the last 12 months, okay? That's not great, but SoFi perhaps has something to look forward to in one way or another. So that's what I want to talk about and then really break down some of the downsides that you should be aware of and then give you my updated thoughts and opinions on the company. Here's the thing. SoFi makes the vast majority of its money from loans, primarily personal loans and student loans. That is where the crux of this entire issue for SoFi comes, and it's also why they were the main people suing the administration and the federal government, for that matter, against the student loan forgiveness plan. Here's why. Back in the day, before the pandemic, when everybody was paying their student loans, at that point in time, SoFi's biggest value proposition was this. The government is charging you this much for your student loans. We are a private company and we can look at you and say, look, I think you're getting a business degree. You're going to make a lot more money. I'm going to charge you a lower interest rate than what they're going to charge you. So somebody can say, oh, look, let me go get a lower rate, pay off my debt a whole lot faster, and go to SoFi. That was the point. And they were relatively successful in doing so until the student loan pause started back in 2020 and was extended all the way to where we are at this point in 2023. That loan business has dropped more than 50%. That's an issue for SoFi. That's why they sued. Now, we expect the pause to end at some point this summer, and we also expect, fortunately or unfortunately, depending on how you fall on that issue, we expect the Supreme Court to cancel the student loan cancellation plan, and that people who wanted that relief, and voted for that relief, and applied for that relief will likely not get that relief. If that were to occur, you've got a new business line, or really a renewed business line if you're a SoFi. And to me, I would expect whatever revenue SoFi was making the first part of 2023 and whatever you made last year, it has got to be bigger in 2023 and 2024. Therefore, this is that buying low moment, at least on paper. At least on paper, that would seem perfect, because if I can sit here and think that, and you can sit here and think that, why is the stock still down? Right? Why is it still down? Even just over the last 6 months, it's still down double digits. Last year, all the tech stocks, right, or I would say 90% of the tech stocks were down double digits. PayPal, SoFi, Square, Upstart was terrible all last year, all in the fintech space. This year, though, a lot of tech stocks are up. Even last year, like Meta was down 75%, 65 to 75%. Google was down, Apple was down. Now all those stocks are up except for SoFi, even though we all know at some point this summer is likely going to be good news for SoFi. The other issue is this. It's very difficult to evaluate this stock objectively based on the numbers, because SoFi to this point in time has never made money. It has never made money. They have more users every single year for the most part. They have made more money on the top line. That means the revenue, the money they bring in, has increased almost every quarter since their existence on Wall Street. But they are spending a lot on marketing. They're spending a lot on just general expenses, and they continue to have losses. Some quarters, this loss is worse than others. But how do you say, hey, look, I'm losing money every year. What do you think I'm going to be worth in 10 years? That's hard to call, because I don't have enough past information to really project in the future. And if everything you got is losses, I can only project losses for the most part, right? If you go to Yahoo Finance, right? If you go to Yahoo Finance right now, you go all the way over to the analyst tab and scroll all the way down to the bottom, you will see the second to last option there is going to give you what analysts think that the company is going to grow at. They think right now the company is going to grow the next 5 years over 178% per year for the next 5 years. Look, man, I hope that's the case, right? I hope any stock I buy is expected to grow at that rate, but that's really unrealistic. And that is hard to just believe in when you're investing in something that was down 20% and, mind you, down about 75% or so from where it was just 2 years ago. We're talking 2 straight years, from 2021 to 2023, straight down losses, right? And down 20% just from the last time that we talked about it, this time last year. So I get it. If you're investing in SoFi and you believe in SoFi and you're buying SoFi around $5 or so per share, I get the belief, I get the hype, and I see it. It makes sense. They do all the good things, put that in air quotes, because you're a bank, you're a loan officer, if you will. You're also an investing app, all tied into one. And it's all a very nice and easy, simple app. That all makes sense. All of that makes sense. And you could be turning on the student loan faucet at some point this year. And also, we said this last year, that they expect to be profitable in 2024. Now, is that still a realistic expectation based on their previous earnings call? That one's up in the air. That one's up in the air. But we will see. Here's my thing. SoFi as a business, just like I said last year, makes sense. I understand the bullish case for the company. The issue is, will the market see the same? Will the market see the same? Because it does not make sense, and I think you would agree here, that if I can see this and you can see this, that it's May already, so June, July, August, next 3 months or so, they're going to be turning on student loans in one way or another. SoFi would be a major beneficiary of that. Why wouldn't the stock start rising now? Like that just doesn't make sense. Because if we could all see it, we would all buy low, right? And then we would sell it high some point later down the line. But that has not been the case. And for me, that's what it comes down to. It is still too risky for me. I cannot nail down a price to say this is overvalued or undervalued, because even if I buy it at $4 a share, wherever it is today, it can still drop another 25%, right? It dropped 12% just the other day from earnings. So what is the risk that we're taking here? How much further could it fall? And if it does rise, are we talking, back to where it was at $20 a share? I mean, how many hundreds of percent? Not just 5 or 10. We're talking 100, 200, 300% gain just to get back to where it was 2 years ago. Not saying it can't happen, but it's going to be extremely difficult. And until I can really nail down a value for it, I want to manage my risk. I want to continue to manage my risk, because there are plenty of other companies that are doing quite well that don't have these types of risk, and they're easier to evaluate. I mean, look at Google and how well they have done this year. Look at Nvidia and how well they have done this year. Now, those are stocks that we've been talking about for the last 2 years. Same with SoFi, and those businesses made a whole bunch more sense. For me, again, it's really looking at risk, right? What am I risking to get this perceived profit? I can risk less money or less losses by investing in Nvidia or investing in Alphabet. Those are businesses make sense. They're well established. They're easier to predict. Doesn't make them 100% predictable, but my chances of losing, based on the past information we have, is a lot less in those two companies than it is in SoFi. So for me, it is still a no, but I get it. If you are a high risk taker and you were to put several thousand in SoFi, good luck to you. No shade here. But I hope things work out for you. I think they could. And they should work out for you. But I'm just not willing to put that much on the line on a company like this based on the information that we have. Just based on the information that we have. The other half of this is, because you're consistently losing money, you're going to consistently borrow money. You're consistently borrowing money at this point in time. Rates are going to continue to go up. In fact, tomorrow we're supposed to get another announcement that rates are going to go up another 0.25%, a quarter of a percent. SoFi gonna feel that, right? As will most tech companies, but SoFi, which is unprofitable, is going to feel that even more. That is going to be an issue for them, and it's been an issue all of last year as well. I don't know how they're going to deal with that. So those are my concerns about the company. I see the rose-colored glasses. I understand the bullish cases for it, the positive cases for it, but I'm somebody that looks at this more as a defensive investor. I'm trying to protect my downside, and of all the stocks that are out there, and there are plenty, which one of these can make me the most money and has the lowest chances of losing? Nothing has a zero chance. Nothing has a zero chance, but there are several other tech stocks that are much easier to evaluate, easier to make money, and have a much lower downside, a much better downside than what SoFi has. So Those are my thoughts. Let me know what you think in the comments below. Do you currently own SoFi? Yes or no? Would love to hear that. I currently do not own shares, but I'll keep my eye on it. Let me know what you think in the comments below. And as always, make sure you check out our members only, because we do these exclusive deep dive breakdowns, just like the one that you saw last year. We do that almost each and every week. This week, I'm going to show you how to adjust your model, right, in terms of how you're evaluating the stock and what price can you get in on something and what price makes the absolute most sense. I'm going to show you how to adjust it and customize it based on the stocks that you're looking at. All right, that is it for me. I will talk to you later.